In recent times, the world has once again found itself surrounded by geopolitical tensions and conflicts. News headlines often create concern among investors and businesses, raising an important question. What does global conflict mean for economies and investments, especially for India? History shows that while modern-day wars are dangerous and disruptive, they rarely escalate indefinitely. One of the key reasons is the deep economic interdependence between nations. In today's interconnected world, prolonged conflict can harm all participating economies, which often encourages countries to limit escalation. However, conflicts do bring short-term challenges. Supply chains may get disrupted as trade routes and production networks face uncertainty. When this happens, the availability of goods can decline and prices may rise. Such supply shocks often create temporary inflationary pressures affecting global markets. During these periods, currencies may fluctuate and interest rates can rise as governments and central banks try to stabilize their economies. For investors, these macroeconomic changes can initially create volatility and uncertainty. But the story does not end with the challenges. Countries that maintain strong diplomatic relationships often find alternative supply channels, ensuring that essential goods and resources continue to flow. India, for instance, has developed strong bilateral relationships with multiple nations, allowing it to navigate disruptions more effectively. Another important cushion comes from strong foreign exchange reserves, which help protect the economy from sudden deficits and reduce the chances of panic in financial markets. India's economic structure also provides resilience. A large domestic market, strong manufacturing capabilities, and growing industrial capacity allow the economy to maintain momentum even when global conditions become unstable. Over the past 18 months, proactive measures taken by the Reserve Bank of India and the government have created sufficient policy space to support growth if global conditions deteriorate. Beyond resilience, India also possesses several structural advantages. Stable governance, a progressive economic outlook, strong consumer demand, cost-effective labor, and supportive policy frameworks make India an attractive destination for investment. In fact, during periods of global uncertainty, investors often look for economies that demonstrate stability and growth potential. India's strong economic performance relative to many global peers increasingly positions it as a safe haven for foreign capital. So while geopolitical conflicts may create short-term turbulence, they also highlight the strength of resilient economies. For India, the story is not just about managing uncertainty, it is about emerging stronger in a changing global landscape. If you found this insight helpful and want more informative videos from Omega Financial on markets, investments, and the economy, don't forget to like, share, and subscribe.